This webinar is part of our Elders Action Network's Fix My Funds campaign. Some of you might know that we've been learning that our retirement savings that we hoped to provide for our security in our future is somewhat threatened by the fact that many of our funds are being invested in fossil fuel development and deforestation. So it may be providing for our future, but those funds may be threatened as stranded assets in the future. And it certainly is adding to the destruction of our planet and the security of our children and their futures. So we've been trying to work with the Climate Finance Network, the Global Climate Finance Network, to find ways in which we can impact the financing of fossil fuels. We're very fortunate today to have Andrew Behar here with us. Andrew is the Executive Director or the CEO of As You Sow, which is the nation's leading nonprofit practitioner of shareholder activism and engagement. It has a 30-year record of working on these issues, so they've been in it for the long haul. Thank you, Andrew, for the hard work you've been doing with your colleagues. As You Sow promotes investing that is aligned with our values and uses shareholder power to compel companies to lessen the impact on issues that concern many of us. And these issues not only include climate change, but toxins in our food, ocean plastics, diversity, equity, inclusion, racial justice, a variety of issues. And as you peruse their website, you can learn more. And we'll learn more a little bit in just a few minutes with Andrew and his staff. Andrew was previously a documentary filmmaker and an entrepreneur. He's an inventor of 5 patents and was recently named as one of the Purposeful 50 change makers, true change makers who deliver on social justice, environmental protection, diversity, inclusion, racial equality, gender, and pay equality. So Andrew, that's a wonderful award. Way to go forth in life. So we're going to get started. Crystal, who's on the call here under Elders Action Network, is our Zoom tech today. There she is. Hi, Crystal. Wave at everybody. Thank you for being here and helping us with any Zoom problems. I just sent you a quick chat about Nancy, who was trying to get on. If you could give her a call. She's actually in your backyard. I know where she lives. So maybe you could help her get on. She said she wasn't able to get the link, even though she registered.
What's her name? Nancy what?
Nancy Slater. I sent you her phone number. Starts at 610 in the chat. Great. And seeing some new faces and some familiar faces. For those of you that don't know about Elders Action Network, we are a national organization composed mainly of volunteers with a couple of incredible staff people to do the hard lifting. And we are building a movement of elders who are addressing the concerns that keep us awake at night. So climate change, sound democracy, and social justice issues are our prime areas of engagement. And we do that by inspiring and educating ourselves to get into action. So welcome today, and we'll talk a little bit more about that as we end up. And Andrew, I am going to let you take over now. Ready?
Excellent. Yeah, well, thank you so much. And thanks everybody for being here. So I'm going to take you through a short slide deck explaining about shareholder power. But really the fundamental idea is that people who have any kind of savings invested in any kind of way have an inordinate amount of power that they may not realize. And that often many of us have power that we've abdicated without even knowing we had the power. And we're going to get into a deep dive into mutual funds and exchange traded funds. And my colleague Grant Bradsky is here as well. We will be dividing up into some breakout rooms so that we can actually give you a workshop, because As You Sow is one of the things that we really do well is build tools. We want to empower people by giving you information. For instance, most people who own a mutual fund, you may say, oh, it's an index, or if you started work at a company and you were put into a 401k plan and you click the box and you get what's called a default option. you may not realize that you own sometimes 2,000 stocks that are in what's called a target date fund. So the stocks are changing and more bonds are coming in every year. It's getting or automatically adjusted. Now, those stocks may be exactly the opposite of the kind of stocks you want to hold. You may be holding big oil and companies that are burning down the Amazon rainforest. You may own private prisons, and you may see that as a manifestation of racist policy. And there's no way to know what's actually in your portfolio, even if you read the prospectus, and they are very long and detailed because they only show you the top 10 holdings. You have to actually do the research and go in and figure out, oh, this is a Russell 1000 index. What does that mean? Well, it's 1,000 companies. You own shares of 1,000 companies that do all kinds of stuff. And some of them are just really great on let's say, gender equality, and some are just the exact opposite. Now, not only that, but the company who you've given your money to invest on your behalf also has your power to vote your proxies. And a proxy vote, I'm going to get into details on this, is every annual meeting. Every year, the companies convene at an annual meeting, and shareholders get to ask questions. And As You Sow is an organization that asks those questions. We ask a lot of questions. In fact, this year we engaged over 200 companies on issues like climate change, on plastics in the ocean, on toxins in the food system, on racial justice, on diversity, on executive compensation. And we sit down with the companies and we talk to them. And if they don't want to take any action, we escalate by filing a shareholder resolution. And that gets voted on by all the shareholders. Now, Vanguard, who owns that index, is going to be voting against us. They vote against everything we do. They vote with management as a rule. So, well, that's your money. You earn that money. And Vanguard is now voting against a resolution that, As You Sow, is asking the company to have a climate transition plan or asking it to have more justice. So these are the ways that you have abdicated your power and you don't even know it. And so by the end of today, you will know about just how powerful you are and the things you can actually do, because there's things you can literally do right now today. And that's what the workshops are going to be. We can actually help you to actually shift money into more sustainable investing if you want to do that, and how to request your power. So I'm going to take a couple of, I'm going to share a screen. I'm going to take you through just to give you some background, just to make sure we're all kind of in the same approximate space of understanding. So we're going to talk about shareholder power for positive change in the world. I'm going to give you a little background on As You Sow, talk about being an empowered shareholder, talk about this new idea called stakeholder capitalism, and then Know What You Own is that's the tools that we build. So I always start with my dog Oscar, because Oscar's just a cute dog. And the idea is, if Oscar dug under the fence and went to the neighbor's yard and knocked over the trash can, and the neighbor came over and said, Oscar's done this, I would feel responsible. I would say, oh my gosh, I'd go clean up the mess, I'd fix the fence, I would maybe scold Oscar. But if I own shares in a company and they have a toxic spill into a river, I go, well, management, the board are going to take care of that. I'm not responsible. But in fact, what I believe, and what As You Sow believes, is that if you own one share of a company, you are a beneficial owner, and you have the power to actually make that change. You have responsibility as that beneficial owner because the board reports to you. And the board's job is to align incentives to get the CEOs and the executives to do things. And that is where you have a lot of power. So As You Sow, we believe that environmental health and human rights can be shifted and improved by corporate power. Now, corporations are the largest entities in the world. Of the 100 largest financial entities in the world, 69 of them are corporations. So Walmart sits right between Canada and Spain. This is when Walmart shifts, it affects not only all their employees, but millions of customers and their supply chain. So getting that one decision can have a ripple effect. And that's what we do. We get the companies to make these decisions that ripple through all the stakeholders. So these are a few of the companies we deal with. And we deal with, as I mentioned, this year we had engagements with 211 companies. But biggest companies in the world. And we believe, as our name says, that as you sow good environmental, social, and governance policies, you're going to reap increased share value. Your company's going to be worth more. You're going to get better employee retention. Very expensive to when employees come and go, training them. You're going to improve your brand and you're going to reduce your risk. So in the case of that company that's dumping stuff in the river, externalizing the cost of that, you may have a lawsuit when people get harmed. That's expensive. Shareholders have legal standing. You have the right, if you own shares, to talk to the company. And you have the power, so long as you don't abdicate your power, to actually make change. And that's, again, what we're going to talk about. So stakeholder capitalism is a whole philosophical shift. And you might feel like, why is things so just kind of chaotic right now? Well, basically, there was this guy named Milton Friedman back in the 1970s who said, corporations can do anything so long as they make a profit. You can have slavery in your supply chain, you can abuse your employees, you can poison your customers, as long as you make as much money as possible. Well, that idea has led us to climate change, to the hottest year on record. To you probably, if you read the news today, there's floods in Vermont, there's floods in Oklahoma, there's floods in India, there's a heat dome over the South. I mean, I don't have to tell you about climate change. Ocean plastics, and a new study that came out that every one of us has 71,000 pieces of microplastic in our bodies. We've just been inundated with plastics. So the state of the world is not in a great place. So the Business Roundtable, 181 of the biggest companies in the world got together, and this was in the end of 2019, and they said, we have a new purpose of a corporation. It's not just making as much money for shareholders, that if you're going to try to do that, if you take care of your employees, that's one stakeholder, your customers, your supply chain, and the communities where you operate, which could extend to the whole planet, you're going to be the most profitable. You're going to outperform. And that new idea, the new philosophy of a business, the World Economic Forum in January of 2020, they agreed. They said stakeholder capitalism is the way. And they declared that they put it out as a manifesto. This is the fourth industrial age, that the changes were happening right now are of the magnitude of the Industrial Revolution. And I agree with them. I think the complete change of the global energy system, it's just, we are in a transformative moment in time. And this is how business is dealing with it. They've actually philosophically already shifted. And you've probably noticed there's this whole anti-ESG crusade that's happening. In fact, right now, as we're speaking, Congress is having hearings about this anti-ESG, saying that and ESG stands for environmental, social, and governance, that just to look at the risk, environmental risk and social risk, that they want to make that illegal. They want to try to not allow us to look at it. They want to keep everybody asleep. And that's the words that they use. They do not want people to awake. So the idea is, they're going to throw Uncle Milton under the bus. That's Milton Friedman. We're going to have its new corporate purpose. And what we're heading for is a regenerative economy that's based on justice and sustainability. And the companies who are doing that are the ones who are succeeding. And I'm giving you a bunch of examples. So now it's all about money. Now, money, this is showing that ESG is money flowing into environmental, social, and governance, where there's less risk, it's just booming. That's where people want to put their money because it's less risky. The bottom line is, if you're an investor, would you invest in a management team that assesses risk? So if you're going to invest in a company that makes socks or t-shirts, a management team that goes, oh, look, there's a big flood in Pakistan. They've got no cotton. Texas lost 70% of their cotton harvest. Where are we going to get our cotton? And they're going to manage that. Or company B says, we don't assess risk. You got a better bet putting your money into company A. They've got a higher probability of getting product to market. So people investing in good management teams is growing. It makes complete sense. They outperform. So with shareholder advocacy, as I said before, we sit down with all these companies and we bring them ideas. We do a lot of research at As You Sow. We do about 8 original research reports every year on plastics, on pesticides in the food system, on racial justice, on net zero emissions, so on climate change. on linking executive compensation to these changes. And so we sit down with the companies and we go, look, you scored a 7 on racial justice. Your direct competitors scored an 11. Here's the 3 things they're doing you're not. And if you want to get your score better, this is how you do it. This is what it's going to cost you. But here's the cost of doing nothing. And most of the companies say, yeah, this makes sense. You guys are like McKinsey for free. And they actually make the change. So we don't have to escalate into filing a shareholder resolution. So this is last year. We're putting our numbers together for 2023. It's not quite be ready in about 2 weeks. But last year we had 196 engagements. So 97 companies said, great idea, let's go do it. 99 did not. So we filed a shareholder resolution to escalate it, to have a conversation with all the other shareholders. Once we did that, 56 of them said, you know, your idea actually is pretty good. We don't want to have that conversation. And they agreed to our terms. So the rest of them went to a vote. And of those, we had a 41% vote with 10 majority votes, and about a little over $2 trillion was voted on our resolutions, voted for our resolutions. This year, the numbers are a little lower, but we deal with all these different 11 issue areas, but pretty much very similar. About this year was, I think, 211 engagements, but 70% of them, and this is important, the companies said, yes, we want to make change. And so the rest of them that went to a vote, that is a continued conversation. But as I said, we're at this inflection point, and it's because all these things, this technology, policy, and passion are all coming together. There was this whole idea of pass-through voting. Soon, and actually some companies are doing it, you'll be able to vote, even though it's in a mutual fund. Our platform, Investor Values, I'm going to show you in a minute, allows you for the first time ever to look inside a mutual fund. So technologies is opening things up. Policy of universal proxy. It's a new way to run a board, a candidate for a board. It used to be much more difficult, much more expensive. This just started in September. It's only just a few months old. This climate disclosure rule, the SEC hasn't released it yet, but when they do, it's going to say that companies, when they disclose information, it has to be accurate, verified, and in a standardized format. Right now, the information companies are putting out can be complete misrepresentations, and there's no repercussions. So this is all changing, and it's changing. We're right at the cusp of it, like I said. So our areas, climate change, we believe every company needs a net zero goal, 5% emission reduction every year. Ocean plastics, we want to eliminate all single-use plastics. We want to reduce all plastics. So an example would be we had conversations with McDonald's and Dunkin' Donuts and Starbucks. We filed resolutions, and all of them agreed no more styrofoam cups. 3 billion styrofoam cups will not be produced this year because of the efforts that we made and because of the support of shareholders who owned shares in those companies. Environmental health. So this idea of regenerative farming, General Mills, we talked to them, we filed resolutions with them. They agreed to regenerative farming through their whole supply chain for the reason because when these climate-induced superstorms happen, it washes away all the soil of industrial ag. But a regenerative farm that's using crop rotation and different techniques, it can actually absorb the water. And actually, if there's a drought, can hold the water. General Mills said, we're doing it because we need a resilient supply chain. We need to be able to get the raw commodities to make the cookies and crackers that we make. Pesticides, Kellogg spraying all of the wheat, oats, and beans with glyphosate. That's a known carcinogen. We got them to agree to stop that. Why? Because, well, we went to them and said, look, we think poisoning our customers is a bad idea. But also there were the lawsuits where people who were using glyphosate just to knock down their weeds. One person won a $200 million, another one a $400 million lawsuit. Said, look, it's in every bowl of Special K. This could be bigger than tobacco. Like, we got this too much risk. They have agreed to that. So social justice, we're working with companies to get them to have more justice in their workforce, which is helping them retain their employees. And transparency is at the core of everything. It's like you can't really operate without understanding what's going on. And as I mentioned, there's some SEC rules coming out, also rules in the EU that are coming. So big transformations happening. So investor values, I'm going to now share actual, these are different ways to look at a mutual fund. Maybe I'm going to pause here before I do that, just to see if there's questions. And then I'll give you a little demonstration of investor values, and then we can break into working groups to kind of go deep and look deeply inside of the mutual funds. So maybe some questions, you can put them in the chat or just unmute, however you want to do it, Diana.
You said you've gone to these corporations and we have resolutions that they've agreed to. You're presenting it on behalf of the shareholders, and the shareholders are creating the pressure. Is that ultimately how this change happens, or do you just meet with them and they say, yeah, great resolution?
So as you said, doesn't own shares. So we're doing research and we're saying, okay, we want to engage McDonald's on plastics or on racial justice. So first thing we do is we send them a letter and say, we think that this is an area of concern. We sit down with them. And as I mentioned, we did this 211 times this year, and more than half of them said, great idea, let's go do it. Now they go do it, and we check back with them, we help them, etc. So
Wow.
About half the time, companies just go, yeah, this is not only going to save us money, this is going to get me a bonus, this is going to make us get, it's going to be good. So the ones who don't, so let's just say out of that 211, there are, a little over 100. We then go to folks like you and say, hey, anybody owns shares of McDonald's? And you have to have owned them for $2,000 worth if you've held them for 3 years. So we say, and so people come forward and they go, yeah, well, I've owned McDonald's for 10 years. I've got $10,000 worth. And we say, would you authorize us to file on your behalf? And they go, yeah. They sign a DocuSign. We then write a resolution. We vet it with SEC counsel. We file it with the company, and it has to be filed on a specific day, 6 months before the annual meeting. The company can then protest. We defend the protest. If we win the protest, then it goes forward. We then brief other shareholders. So we look at everybody who owns shares of McDonald's, and we say why this is righteous, why this is a good thing for the company. And we brief all the big pension funds, billions, hundreds of billions of dollars worth of shares, and explain why this is a good idea to get them to vote for it. We do media. We're in the press. We're in the New York Times and the Wall Street Journal. And then it goes to a vote at the annual meeting, and we get a vote, and then we continue the conversation with the company. The votes are non-binding, even if you get a majority. So we got a 96% vote at Caterpillar last year. Company still was very resistive. So we had to escalate beyond that and say, look, 96% of your shareholders think this is a really good idea. And the board's not doing anything. We're going to have to replace the board. You're not doing your job. And so then we ran a board slate. And so we just keep escalating beyond that. So it's a whole process that we go through. And then even beyond a board slate, and we have run board slates, we put 3 people on the Exxon board in 2021. We then also litigate. There's things called derivative shareholder actions, where we represent the company and sue our own board of directors. We're right now involved with 4 of those with mid-size oil companies. So we have a lot of tools in our toolkit, but ultimately the board reports to us. We have ultimate responsibility for the company and directing them toward justice and sustainability, which is going to ultimately be good for all stakeholders.
Thank you.
It's a process. We're very tenacious. We've been at this for 30 years. Yeah, some of these, we're like, in year 5, but the companies, eventually they go, this is actually really good. I'm going to get a bonus if I do this. And what's also interesting, when you knock on the door of the company, you go, hi, it's as you so. There's a corporate social responsibility person, a CSR professional at each company, and they meet with you, and they've got their own agenda because, well, they've joined this company and they want the company to get better. So they go upstairs and go to the CEO and go, look, I need power to deal with these as you so people. And they go, okay, you have some power. And now they get to deal with us, but they're generally, they're also telling us like, hey, also ask for this while you're doing it, because and so it's a strange, there's theater involved in it. For instance, we're at Starbucks and we're going, we got to stop using these green straws. It's bad for our brand. Because we're always talking about material risk. That means a financial risk. So we're saying people are going to stop drinking our caffeine water if we keep killing sea turtles. And now, same day, it happens to be Greenpeace and Lonely Whale are protesting out in front of their headquarters. It's big billboards of sea turtles choking on green straws. And the people in the boardroom are like, why are these people doing it? They're harming our brand. It's like, no, the decisions made in this room are what's harming the brand. Let's decide to not use any more plastics. And that's going to be good for the brand. And so there's that tension, but that ultimately Starbucks did agree to that. And actually it's a funny story about Starbucks because we've been dealing with them. If you see a recycling bin in Starbucks, it's because we asked for it. The fact that they're not using bovine growth hormone, it's because we asked for it. So their cups, we want to have recyclable cups that are using recycled content. It wasn't us, but somebody put a tracker in a Starbucks cup and threw it in the recycling and turned up in landfill. And it became headline news that Starbucks essentially didn't tell the truth. They called us up the next day and said, what can we do? They said, well, you can agree to ban styrofoam at all your stores globally. That would probably give you a pretty good headline. And indeed, they did. And that's what led, once we got that we took that to Dunkin' and said, hey, you want to keep up, and took it to McDonald's. And that's where we got the ban essentially on styrofoam cups, was because the company said one thing and did another. So anyway, I could tell stories all day. I'm sorry. Keep going. Go ahead.
Andrew, this is great. I love hearing about it. I feel like As You Sow is almost a union for us as consumers to get what we need from the corporations. But I'm really curious about going into the breakouts and doing some of this so we can understand how to use some of your tools. And I know that that's what we're about ready to do. So I want to urge us to move in that direction.
Okay, let me call up the let me just do a little demonstration for.
Okay.
How much time do we have? Just so.
Well, we're going for about another half hour or so. We're going to do about 15 minutes in breakouts.
Okay, hang on.
But we're okay in time.
Getting an odd thing with my browser here, but let me. Was there one more question, Libby, while I get this?
I have a quick question. I think it's quick. I heard on the news that in Montana, they are building a new nuclear power plant.
Mhm.
And I wonder if you take any role in preventing something like that from happening before it even gets started. Is
Let
there
me-
any kind of pressure? Because we know that that's not a good thing at all.
Yeah, we could do a whole webinar on that. In fact, I'm involved with all these folks. There's a lot of climate activists who are going pro nuke, saying that that's the only way we can power. And I am absolutely opposed to, nuclear power is, first of all, too expensive. It's dangerous. The one plant, the Georgia plant, they got that approved in 2009. It's 15 years over schedule and $15 billion. And now there's these SMRs, these small modular reactors. Like, what could go wrong putting nuclear material into everybody's home? So we're opposed to it, but there is a growing, and Oliver Stone just came out with a movie called Nuclear Now, saying, nuclear's, it's safe. No one's ever gotten hurt, and it's easy, and it's the solution for climate change. So you're going to be seeing a lot of effort and PR happening in a pro-nuclear stance more than you've seen in 20 or 30 years. So it's a big issue. I'm actually involved in a debate with a group of venture capitalists who are funding SMRs. So it's a debate, but there's a big push right now. I know I've been spending a bunch of brain cycles on it. So this is the As You Sow website. Can you all see it? And I think it's like
Yep.
are the colors inverted? Do you see like weird colors like purple? No?
Yeah.
See,
It looks good though.
How about
Looks good.
okay.
Let's go to the website.
Okay, it's just mine. So I'm clicking on invest your values here. It's It's right on the, whoops. Where did it go there? So it goes from, so this is investor values. Now you can go in here and you can just type in a name of a mutual fund company like Vanguard, and you can click on a mutual fund. So in your 401k or in your IRA or just in your portfolio, you might own this Vanguard Total Stock Market Fund, VTSAX. It's a very popular fund. It's hundreds of billions of dollars. Now, you may not know what's in it, but we are going to show you that if you click here, these are all of the big oil companies. This is called the Carbon Underground 200. So the 200 largest oil, gas, and coal companies. Well, now you know how many, what about coal? You can see all the coal companies. You can see all the fossil fired utilities. Totally, there's 210 fossil fuel companies. It's 8.91%. We update this once a month, by the way. We're looking at 3,000 mutual funds. It will be expanded to 6,000 by the end of the year. But this is a deep dive that no one, you cannot have access, just like there's no way to access this. You take you weeks, and we do it, It's free, it's available, but we also score on other things. So if you look at this scorecard here, so if you want to look at deforestation, well, now it's looking through the lens of what companies do you own in your mutual fund that are in the business of palm oil, paper, pulp, rubber, timber, cattle, soy, reasons to burn down the Amazon or Indonesian rainforest, all the banks and lenders. So of course, JP Morgan's the biggest one, Bank of America, and also the consumer brands, because if you own Pepsi, they're buying palm oil to cook their potato chips. So you might say, well, look, this is 13% of this fund. It gets a C. So we grade each one. We also give you a deep dive on each of these different companies. What do they do? Why are they on the list? And there's a lot of research. It goes, I'm going fast. It's very deep. You can go super deep. But we also look at social issues. So for instance, the prison industrial complex. You may own, if you own Vanguard, you pretty much own the prison industrial complex. Every Vanguard fund. So for instance, you may not realize it, but inside your fund, you own shares of the world's largest private prison company. You may not like that. And if you want to, actually, you could also, you can aggregate up for a fund family. So Vanguard on prisons, you can see basically the best Vanguard fund gets a C. They mostly get Ds and Fs. So this is a tool to allow you to do research. And so when you come to this research page, and Grant will take half the group and I'll take half the group, and we'll take you through your actual funds, you can sort by financial performance. So that's important. So you might want to say, well, I want to sort by 3-year financial performance. It's sorting in real time. It's a very fast site. Now you also want to look at all the scores, because I don't want to, like this, yes, this particular fund, did 57% over 3 years, but it's getting an F on fossil fuels. I don't want that. So you can go in here and you can set all kinds of things. You could say, I only want to see diversified funds. So that means that like themed funds are like a pharmaceutical fund or a real estate fund. This will be funds that go across all the sectors. You may say, I've got to get at least a C on fossil fuels, and I got to get at least a B on the prison industrial complex. Well, it's already just resorted in that time. And now you can go and you could say, oh, well, that looks good. Let me see this one. And let me go look at more. You can see them all side by side now. So you can look at the funds. You can say, oh, this one's got a sustainability check. That's a good thing. Parnas is a good company. You can look at all the scores. Now you can look at the returns. You can say, well, let's see, over 1 year, this one's up 24%. This is 17%, 17%. This one's outperforming. So it's a tool. So when you look inside your portfolio, you now can say, I want to balance my values with the returns, and you can make an educated decision. And that's really what these tools are about. And that was a very fast. When we doing the breakout rooms, we will get, if you want us to look up a specific mutual fund, we can do that. If you want to go into depth on, I want to just talk about gender or weapons, we can do that. And anyway, Grant is very expert at this. He's been helping part of the team that's built all this and maintains it. So just some broad questions for the group before we break up.
Andrew, I'm just going to ask one thing here. Some of my funds are managed by somebody else. So this kind of has given me some, it's given me the opportunity to look at my funds and see how they rate. And then I could go back to my financial manager and say, hey, what, I don't want such funds. What can you offer me in place? And here are some suggestions. So it's not like I have to do all the
An example,
but I feel like I'm training myself to be a better.
well, you're also training your fund manager. You're training your investment and advisor. So for instance,
Training myself too to not be.
let's say you're in the S&P 500. This, a lot of people, they say, oh, I got to be in the S&P 500. Well, guess what? There's an S&P 500 without oil. And guess what? It actually returns more money. It's actually got better returns. Now, your investment advisor might say, you got to be in the S&P 500. You can go back and say, well, rather than SPY, that's the ticker, I want SPYX. That's S&P 500 without oil. And here's why, because I don't feel good about owning Exxon. I want it without oil. And I also want the outperformance and I want the reduced risk. Because right now, the funds with oil are going to be performing well, but it's a bubble. This is a bubble based on Vladimir Putin's genocide in Ukraine. And when that ends, which hopefully is soon, the price of oil are going to plummet. It's a bubble.
We're gonna have to move it. We should move into the breakout rooms because we're.
But anyway, there's the all world index and all world index without oil. There's emerging markets and emerging markets without oil. So we can look at all those in the breakout rooms, but it's about doing your homework. So go ahead and break us into groups and then we can.
We're going to leave the.
Right at the end of my breakout, I was asked, okay, you know your site pretty well and you're zipping all over the place. How do I do? What do I do? If you go up on that little hamburger menu, the 3 lines, you'll find that there's video tutorials that can help you, take you step by step through different types of searches. You can also reach out to us if you need help. But basically, if you have a ticker, if you know the name of the fund that's in your portfolio or you've read about and you want to just do research, if you type that into the search bar, it should take you to, or will take you to a scorecard, and then you could look at the gender section. And generally the grades are kind of the simplest, highest level way to look at it. If it's getting an F, we've identified that you're invested in, some companies that are problematic. If you're getting an A, you're probably pretty clean. But again, as I showed you several times, look at the returns. Make sure that you're making a choice that is based on your overall portfolio. As you said, does not give investment advice. We just provide tools and education, but it's really up to people. We're trying to open this up because most people, again, just, I want to be in the Vanguard Admiral Fund. Well, I don't know. It doesn't have anything to do with admirals. It's, it could be hundreds and hundreds of stocks. If it's a target date fund, it could be a fund of funds. So, and I don't know whether you covered this. Did you talk about target date funds, Grant, in your breakout?
No, we didn't have time to get to that. Yeah.
Okay, so we wanted to do a couple of things here. We wanted to see if there were questions. And then you also wanted to talk a little bit about proxy voting. So I don't know if there's other questions that people have for this at this moment, whether we should just go forward and talk about proxy voting. But were the questions that arose that people want to address? Becky? You have to unmute though.
Yeah, I think I maybe should know this by now after hearing what I've heard, but what exactly is As You Sow's leverage? You're not, as an organization, they're not they don't have money behind them. So it's just that we're going to spread the word to investors who are using our website. And we want to advise you on how to look good or, be good? Or do I have that wrong?
So for mutual funds, it's purely educational. So people can align their investing with their values, and that has an impact. That sends a ripple effect when you start moving your money and moving capital. But really the core of our mission is we directly engage companies. We sit down with them, we show them evidence-based business plans, and then if they don't want to make change, we file shareholder resolutions, and then we get hundreds of billions of dollars to vote with us. So like I mentioned, we get a 90% vote at Caterpillar. We have a pretty big seat at the table to talk to that company, and in fact ended up actually seating people on the board. So that's the escalation path, goes from an idea, how do we improve this company, how do we reduce material risk, we take action, we organize all the shareholders that own shares of that company to act as as a unit to say we want the company to be a better company. So
Thank you.
yeah, sure. Martin?
Yes, it seems like you're providing a really useful service. I'm curious how you're funded. Is it private donations or through a foundation or?
So it's a mix of, we write about 60 grant proposals every year for mid-size family foundations. And so we piece it together, for like what you've seen, like fossil-free funds and the Investor Value Suite. We started that in 2015 with a $20,000 donation by actually a group of nuns in the Midwest who thought this was really important. And then we got another donation. We got individuals giving us. So we're about 75% foundation and 25% just individuals like yourselves, just people who make donations at various levels. And so we have a lot of inputs, let's put it that way. It's not one big, we don't have an endowment. We have to raise the money every year. We have 40 people on staff. So it's a big nut to cover. So yeah, so I mean, if you don't mind me making a pitch, we are a 501c3 tax deductible organization, and we appreciate donations, huge amount of gratitude to everyone. But voting. So when we have a resolution, we need votes. 25% of the voting shares of every company simply don't vote. They literally get a mail-in ballot and they just, well, we hope they recycle it, but they throw it in the trash. We have a system that enables you to vote with one click. If you own equities, you have to own the company directly, like you own shares of Apple or shares of IBM. You probably are getting in your inbox a ballot that says, hey, here's your proxy ballot for the annual meeting. And most people ignore them. They open them up and they go, I don't know how to pick a director or an auditor, or what are these resolutions? There's like 30 decisions I have to make. And they say, forget it. Or they get big stack of papers. You probably have gotten those in the mail, and they stack up and like, I can't sift through 200 pages here. This is ridiculous. So they just don't vote. Well, so we have a thing called As You Vote. We vote in a very ESG aligned way. We publish our guidelines, and I'm happy to share those with you. If you go to asyouvote.org, you can click and you can see our guidelines. So our guidelines say, for instance, if the CEO is overpaid, we vote against his compensation package and against the compensation committee of the board. If you have less than 50% women on the board, we vote against the nominating committee. We vote for the pro ESG resolutions. There's also what we call anti-ESG resolutions. So for instance, we file a racial justice resolution saying systemic racism is problematic to the company, and we're going to come up with a plan to fix that. The anti-ESG folks also file a racial justice saying white men are discriminated against. So you have to be very careful. We know how to do this. So anyway, if you go to our site, you could click and say, I would like As You Sow's policy to be voted on all of my future ballots. And you just put the email forwarding in this slot. And instead of getting time to vote, you're going to get thank you for voting. And if you click, you actually have 5 weeks to make any adjustments. Like you'll see a filled out ballot, filled out with the As You Sow policy. And you go like, I like people named Tony and they voted against him. I'm going to change that auditor, or change the director. Whatever you want to do, you can completely customize it, and then it's your wish is voted. So it's a service. It's free, and we're hoping to get the 25% of folks who just don't vote to start to vote, because that will help us to get higher numbers on all of our resolutions. And that gives us a bigger seat at the table when we're negotiating with these companies. Yeah, Jane? You're muted.
Did you say we need to forward our proxy forms to you?
No, I'm going to put, Grant, if you could just go to our website and get the Iconic, the link to Iconic, and put it in the chat. No,
I tried using that and I got to a dead end.
okay. I can take your email if you want to put that in the chat, or send it to me,
Okay.
and I'll have one of our staff help you. What it is there's a single email address that sends you all your proxies. Let's say you own 50 different companies. They're sending you 50 proxies. You take that address and you put it into Iconic, and now that ballot gets sent to them, it gets voted, and then you get notified it's voted, and now you can come in and customize it. So it's just that it's a loop, but I can have a customer service person help you with that.
Okay, is somebody different than Grant? I have Grant's email. And he or somebody else.
Yeah, it's a woman named Namita who works with us and also works with the customer service people at Iconic, and we can help you do it, or we can actually do it on your behalf if you like. Yeah,
Yeah, go ahead. And then I have a question in the chat for you, Andy.
Okay.
But let's do Marty's question first. Go ahead, Marty.
Yeah, I have two questions. The first one is there a list of all the companies that you do that for? I mean, there are over, 8,000 publicly traded corporations. I can't imagine you're tracking every single one of them.
Yeah, we do 20,000, everything across the world.
Okay.
We've built an algorithm. We built an automated rules-based system. So we know if the CEO is paid X, vote this way. If there's less than 50% women on the board, vote this way. If the resolution, it's a lot of if, ands, and buts, but also we have staff. Namita actually every morning goes in and she does the case by case, because there's stuff that we can't predict, like a merger or something that's not a standardized format. So we actually have rules but we go in and we do that, and then it propagates out to all the ballots.
Okay, then regarding your mutual fund tool, I know some of the mutual funds report out either quarterly or semi-annually how they're changing their portfolio. Do you get access to that?
We update it
more frequently than that?
We do it every month. Every month we update everything. So and so the score may change month to month. And in fact, one of the reasons we started this in 2015, when we did it, all these funds were getting Fs, and a lot of the fund managers were calling us like, why am I getting an F? It's like, well, because you own all these oil companies. And the next month they had, sometimes they were just tiny amounts. They adjusted their weightings in their portfolio, and because they wanted to get a C. And so it was one of our ways of exerting some pressure. So, but every month, and it will expand from 3,000 to 6,000 by the end of the year. So in terms of the number of funds. So my
question is that public information that's available on their websites? Because they don't update them that frequently from what I've seen.
No, so you either have to get it direct from the SEC, and they only update it once a year. We get it from Morningstar. Now the companies, the fund companies, they provide it to Morningstar because they want Morningstar to be upgrading their Morningstar stars and different globes, those sort of things. So we actually, it's probably the most expensive thing we have is we pay Morningstar for every month, giving us the holdings of every mutual fund company in the world. Now, or actually in the United States. We used to do Germany, France, Denmark, and Hong Kong also, but we had a grant to pay for the Morningstar feed. We could do every mutual fund in the entire world every month, but it's just too expensive for the data. And so again, we got a grant from a Danish foundation to spread it into Europe. We did for about 2 years, and then whatever, they switched their mission. So that grant didn't renew. And so we just turned off the switches on Germany, France, Denmark, Hong Kong, and the UK.
Okay, and one further question, if I might. For the Clean 200, do you grade them on each of the different categories that you grade the mutual funds on?
So Clean 200 is slightly different. If you go to clean200.org, you can see that. We've been doing that. There's 9 reports. Every February, we come out with a new one. So we're looking at companies with $1 billion market cap global, and we're looking at how much revenue they're making from green and clean activities. And then we take that list and then we filter anybody who's on the investor values list of oil, coal, weapons. We screen all those out. And we have a couple of other screens. And then the list that remains is the top 200. What's interesting about it is this year it spanned 35 countries and 17 stock exchanges. So everyone asks us, hey, can we just buy that 200? We actually are negotiating with 2 organizations that are going to turn it into SMAs, so separately managed accounts. But going across 17 exchanges is very difficult. So we may just be doing the ones that are available through what's called an ADR, which means even though they're based in Turkmenistan, they're on an exchange that they can be traded. So we expect within the next 6 months, we'll be coming out with, or we'll be providing the data to other investing organizations so that one could say, oh yeah, I want to put $5,000 into the Clean 200. It outperforms the ACWI, the All World Index, by about 2 percentage points a year. So we back tested it for 3 years. So you were 6% above the All World benchmark if you had invested in it. It's actually like the companies are all doing quite well. They really define the clean energy future. So we think it could become popular, and we would get a piece. We'd get paid for our data, which would allow us to fund the data maintenance. That's the hardest thing, is maintaining data maintenance. We license our.
We got to move on. I have another
but-
question for you.
Sorry.
Okay, great.
Thank you.
Yeah,
Thank
see,
you for
started
that.
getting round up.
No, it's okay. I know that you are you have so much information to share. Bill asked, how do I investigate environmental responsibility of individual stocks that I might own? Is there a way of doing that with individual stocks?
There is, but it's not through investor values. Investor values is the aggregate, although we look at each
Mutual
company.
funds, right?
Yes, so mutual funds. So each company, each company puts out a CSR report, a responsibility report. They also probably put out, now it depends which company. So As You Sow puts out a net zero report. We'll be coming out with another one, I think in November, December. So we're looking at maybe 100 companies, and we'll be doing a deep dive on all their emissions, science-based targets, everything about them in terms of climate. A second report linking executive compensation to emissions reduction. Now, we are also aggregating up all of the As You Sow reports into a company level report. So you'll be able to say, oh, let me look at Pepsi. And you'll be able to see Pepsi for racial justice for 3 years, CEO pay across 9 years, plastics and agriculture. And so an As You Sow snapshot of each company. We have it, we're aggregating all our reports into one database. They've always been very siloed. And we have data visualization tools on our website, which if we have time, I'll show you one of those. They're kind of cool.
We're running out of time here.
Okay.
So that's not available now, but will be available soon?
The As You Sow company level data will be available, we hope, by the end of the year. We're in beta testing right now.
Great. Okay. And were there other questions? Are people from the screen, on the screen? Okay.
Right, so can I do that one little demo then? Take me 2 minutes. Hang on a second, let me get a browser going here. Let's have a big blob. But what can you see? Because
Big black blob. Rectangular, there you go. Oops. There you go.
I see a big blank blob too.
Yep.
Yeah, okay, let me stop sharing.
You might have to stop sharing and share again.
Yeah, there's something. going on with my browser? Just doesn't want to browse. Try another browser. I got 3 browsers open.
Okay.
Okay, there we go. So if you go to, you can see this one.
Looks good.
Thanks. Okay, so you go to asyousow.org. And if you click on reports, then you'll be able to see, for instance, if you want to look at racial justice. Let me see if that's working. There's a data visualization that you could click on. And things are loading very slowly, so I hope it comes up. But so this is looking at the Russell 1000. So this is, we rate and rank 1,000 companies. So first we break them down by sector. So I just clicked on communications. And so now you're going to see all the companies that are in that are, I have a frowny face here.
Yes, you do.
Yeah, that's not cooperating. Let me try it a different way. So let me just find a company here. So maybe do it by like Apple. Let's go see if we can, it'll come up with so here's a score for Apple. So on racial justice, it's looking at all these key performance indicators. So what kind of racial justice statement they make, what kind of acknowledgements they have, all these different things, all kind of, this has to do with environmental fines. And we score the company, we put it out on a grid like this, so you can see what it looks like, and then you can compare it to, other companies. So for instance, you might, compare it to, let's see, another big company is Apple, maybe Amazon. We've sure Amazon on here. So anyway, there's 1,000 companies in here, so you can see what I mean.
AT&T was there too. Yeah.
Okay, so you can see, or Altria. So so you can overlay 3 companies, and now you get a sense of, okay, who's doing what. So just if you like, just look at Altria, they're doing really well on corporate responsibility and on their statement. They're not doing anything here on environmental justice, but Amazon's doing much better on environmental justice, and Apple. So when we go talk to the companies, we'll layer 3 companies, their 3 competitors, and then we can say, why is, just like the competitive pressure is very intense. When Coke gets a score, Pepsi wants to have a better score. And so you can leverage that also. And so that analysis that I just showed you, we're doing that for pesticides, we're doing that for plastics, we're doing that for all different kinds of things. But that's how you look at an individual company. And so the As You Sow company level data will have all of those data in one place. So you can extract one company and see everything about them.
Andy, we have to kind of wind this up now. So I want to thank you. This is like an enormous amount of information that you shared with us. This financial industry is quite large and important to all of us. And you put probably 30 years into it, and some of us haven't put that much. So we're learning on the ground as we look at our investments. I see some people nodding their heads.
Great.
I really want to thank you for being here and all the work you've done. And Grant, thank you. And I want to thank everybody else that's here for showing up. I want to ask for a little help here from everybody that's on the Zoom call. We'd like to get some sense of what of this workshop, of this webinar has been most helpful to you. What have you learned from it? And if you would just throw some comments into the chat. So what has been most helpful? What have you learned in the past hour? That would be really nice to hear. That will give us some feedback for future workshops. We'd like to do some more with As You Sow. As I said, Fix My Funds, which is a part of Elders Action Network, is Our purpose is to help people like all of us be able to look at our investments, our retirement savings, and know that not only will it provide for us in the next 10, 20, 30 years, maybe 40, who knows, but that will also provide for our children's future and the future for life on our planet. But we want our investments to not only do good for us, but to do good for the future. And As You Sow is certainly leading the way on this. And
Someone asked for my email. I just put it in the chat.
great. So your comments in the chat would be very helpful. I'm also going to ask people if you wouldn't mind putting in perhaps some of the things that you would like to hear more about. What didn't you hear that you'd like to hear more about? So just throw in a sentence or two. That would be really helpful. We're going to be sending everybody a follow-up letter. In that follow-up letter, there will be a link to the recording of this webinar in case you want to listen to something again. We've received a lot of information. We might want to take another listen to it. And so you'll receive that link. There'll also be a bunch of websites that Andrew has given us about proxy voting and how to use the websites for As You Sow. So we'll give you 5 or 6 different websites that you can take a look at to follow up with. And to let you know that within Elders Action Network, we're going to have a couple of meetings coming up. Our investor activist working group, which would be people just like yourselves that have questions, that want to keep working on our investments, gets together on a monthly basis. And our next meeting will be August 2nd. So you're welcome to join us. And we also have a smaller group that's working on whether or not we will go forward with the Never Vanguard campaign. Nancy, I don't know if Nancy's still on there you are, Nancy. We're working with our partner organization, Earthquaker Action Team here in Philadelphia, where Vanguard is also headquartered. Why are we looking at Vanguard? It's because it's one of the largest asset managers in the world, is the largest asset manager, and it has the most money invested in fossil fuel and coal development and deforestation. We want Vanguard to offer climate safe products that are truly climate safe, and to become a leader in the field, so that, as Andrew has shown, if one company does the right thing, another company is urged to do the right thing. Kind of looking at your neighbors, but that's what we want. We want them to move in the right direction, not the wrong direction. To consider people on the planet when they make decisions, because it's pretty hot today in most of our world, and we want things to turn in the right direction. So if you're interested in this Never Vanguard campaign, if you're interested in working on a smaller campaign within Elders Action Network, please get in touch with me. And this next team meeting is July 26th. So if that's something that interests you, get in touch with me. My email address is lynn@eldersaction.org. That will also be in the follow-up letter that you should get by tomorrow. Are there any last minute questions as we sign off? I'm kind of very committed to signing off on time. We've been on the call for a while. All been sitting on our little butts here.
I just added one thing, is that next, the 27th, we're going to be doing an end of year 2023 proxy. We publish a report called Proxy Preview for the last 19 years. This will be a proxy preview review, which is the end of the 2023 look back. And I just put the link if you want to register and come. But it was a wild and wacky year, and so just you're welcome to come. And it's also on our website. But I'm sure we'll follow up with links to all kinds of things.
Great.
Andy, I don't think your email went into the chat for everyone. It might
Oh,
come as a private message. So
Oh,
if you
okay.
can put it in for everyone, that would be helpful.
Thank you for noting that. Anything else we ought to be paying attention to right now? Diana, do we have a word, or do we cover everything? Good. Great. Good. I encourage people, if you want to stay on for a minute or two just to kind of chat, you can unmute yourselves now. Actually, unmute yourselves.
Well, thank you all.
Bye.
And
Thank you, Andrew.
for
Thank
being
you.
empowered and for aligning your values with your investing. It really does make a difference. It's
Right.
really
And
big.
the only way we can impact this industry is to do it together. So
Absolutely.
I really appreciate
Thank you,
what
Lynn.
you're
I
doing.
really appreciate your organizing this. Just huge gratitude toward Elders Network, and Be well. So I'm going to sign off and Grant and I will sign off.
Thank you, Andy.
Okay.
Appreciate
Thank you so
Take care.
much. Thank
Bye,
you.
take care.
Bye.
Thank you, everyone.
Thank you all for being here. I see some neighbors and friends.